Okay, let's jump right in. You know how we're always keeping tabs on the crypto markets?
Always. It never sleeps.
Exactly. Well, something pretty significant just happened that I wanted to really dig into with you today. The total crypto market cap, it blasted past $3 trillion.
Wow, $3 trillion. First time in a while, right? Since early March.
That's it. Reached $3.03 trillion on April 23rd. But what really caught my eye was the speed of 4.2% jump in just like 24 hours.
Okay, yeah, that fast. That's not just noise. That signals something's really moving the needle.
Right. It suggests there's more going on underneath.
Absolutely. That kind of momentum, it makes you want to unpack it, figure out what's actually, driving that pressure upward.
Precisely. And that's what this deep dive is all about.
Yeah.
We've gone through a bunch of sources trying to pinpoint the main factors behind this uptrend right now.
And what are we seeing?
Two big things kept coming up. First, President Trump's recent comments, sort of hinting at a softer line on China tariffs.
The trade talk factor.
Yeah.
Always influential.
Definitely. And second, a really noticeable uptick in institutional investment. The big money players.
Okay, interesting combination. Geopolitics and big finance stepping in.
Yeah, they seem to be the key pieces here. So we're going to explore those in detail, try and get a clearer picture of maybe where things are heading.
Sounds good, because these two, they might seem separate, but they can definitely feed off each other, create a stronger combined effect. It's about why these specific things are hitting the market this way right now.
Exactly. We've looked closely at the data to really get into the details.
Great.
So let's start with Trump and the China tariffs. He recently suggested, maybe a more lenient approach, even floated reducing tariffs if they strike a deal.
And the market reaction.
Immediate, like a jolt of positivity straight through the crypto market. It felt like a collective sigh of relief almost.
That makes sense. The market clearly read that as, okay, maybe less trade tension. Less tension often means less broad economic risk.
Which helps crypto.
Generally, yeah. Historically, when global economic friction uses up, investors feel a bit more confident putting capital into things perceived as higher risk, maybe higher growth. And crypto's definitely in that basket for many.
And the price action really backed this up. In that 24-hour window ending April 23rd, some serious jumps. Bitcoin got close to $94,300.
94.3. Wow.
Yeah, a 5.6% increase, highest it's been since March 3rd. One source clocked it at $93,503.22 on Kraken specifically.
That's a solid move for Bitcoin, and it often leads the way, doesn't it? It kind of sets the tone.
It really does. When Bitcoin surges like that, you often see the rest of the market follow. It signals broader confidence.
Then did it. What about Ethereum?
Ethereum did too. It hit $1,800 for the first time since April 6th. That was a surge of over 10%.
Over 10%. Okay.
Yeah, saw it at $11,796.91 on Kraken. It's just amazing how fast sentiment shifts and boom, prices react.
Well, that's crypto for you, right? That volatility. But it means it's also really sensitive to this kind of macro news like the tariff talk or just general shifts in investor mood.
But it wasn't just the top two. It was pretty widespread. XRP and Solana both climbed 8%.
Okay, so solid gains across the board for the majors.
Yeah, and then you look at some of the, let's say, more speculative altcoins. Yeah. The gains were even wilder.
Oh, yeah? Like what?
Immutable up a massive 40% to around 66 cents. Bonk jumped 20%. Sui was up 23% to $2.87.
40%. 20%. Those are huge swings. That usually points to a big increase in risk appetite, right? When the leaders move, traders get bolder with smaller coins.
Seems like it. And speaking of speculative, the meme coin sector.
Uh-oh. What happened there?
Their total market cap jumped 17% in that same 24 hours. Reached $58 billion.
$58 billion in meme coins. That's something.
It really is. It just shows how much, retail and maybe social media buzz still drives parts of this market. Highly volatile, very sentiment-driven.
Absolutely. It underlines that retail investors are still a major force, and online trends can translate into serious trading volume.
We saw Dogecoin up 11%, Shiba Inu up 8%, Pepe climbed 12%.
The usual suspects, then.
Pretty much. Even that official Trump meme coin got a bump. Over 9%, though it's still way off its record high.
Right, and with a politically themed one, the link to the news, like the tariff comments, is even more direct, isn't it? Shows how diverse the triggers can be.
Definitely. So, pulling that thread together, it looks like the market took Trump's comments as a sign of potential de-escalation. Less trade war fear, maybe?
That seems to be the interpretation, yeah, like that cloud of economic uncertainty lifted just a bit, making people more willing to embrace risk-on assets like crypto.
And didn't someone mention the US dollar connection?
Ah, yes. Jeff May from BTSE. He made a good point. If there's an expectation of a trade deal, that could potentially weaken the US dollar.
Okay, and how does that affect Bitcoin?
Well, in that kind of scenario, Bitcoin, with its fixed supply, could look even more appealing as a potential store of value, a hedge against a weakening dollar.
Right, an alternative place to park wealth.
Exactly. It just highlights how interconnected global macro stuff and crypto are becoming.
Okay, fascinating stuff. Switch gears now to that second big catalyst, the rise in institutional investment. This feels, well, potentially more fundamental, maybe longer lasting.
It could be. When the big institutions move in, it often signals a deeper shift. What did the sources say?
Well, there was this really interesting survey. EY Parthenon and Coinbase did it back in January. They talked to 352 institutional investors.
Okay, who exactly? Like the serious players?
Yeah, asset managers, family offices, private banks, hedge funds, VCs, the whole lot. And the results were pretty striking.
All right, I'm listening. What are these big players thinking?
Get this, 83% plan to increase their digital asset holdings in the next year, 2025.
Wow, 83%. That's a huge majority planning to up their stakes.
And it gets better. 59%, nearly 6 out of 10, plan to allocate more than 5% of their assets under management to crypto next year.
More than 5%. Given the trillions these places manage, that represents, well, a potential flood of capital into the crypto space. That's really significant.
It really is. That level of commitment, it could seriously impact market maturity, maybe even stability down the line, you know?
It suggests crypto is gaining real acceptance as a legitimate asset class. More big, stable pools of capital could potentially smooth out some of that wild volatility over time.
And there was a political angle, too. The survey found 60% of these institutions expect more interest in digital assets because of the 2024 U.S. election.
How so?
They specifically mentioned sentiment around a potential pro-crypto Trump administration.
Interesting. So political outlook is factoring into investment strategy.
Seems like it. And remember, this survey was done before Trump's executive order in January supporting digital assets. That might have even strengthened this view later on.
It just shows how much regulatory clarity and sort of supportive political vibe matter for getting these big institutions comfortable.
So why are they doing it? What's the main motivation?
Good question. Was it just FOMO?
Not really. The number one reason, cited by 59%, was pretty straightforward. The potential for higher returns compared to other assets.
Ugh, the performance chase. Makes sense. They're looking for growth, especially if traditional assets look a bit sluggish. Crypto offers that potential, albeit with risk.
And what really jumped out at me was this. 68% see crypto among the top 3 opportunities for attractive, risk-adjusted returns.
Okay, risk-adjusted. So balancing the potential reward against the volatility.
Exactly. And interestingly, that beat U.S. equities. Only 40% put U.S. stocks in their top 3 on that basis.
Wow, that's a big statement. It signals real confidence among these pros that the crypto reward, relative to its risk, is looking increasingly compelling compared to, say, the stock market.
And they seem pretty convinced prices are heading up.
Yeah.
79% said they expect crypto prices to rise.
That's a strong consensus. And that expectation itself can become a bit of a self-fulfilling prophecy, right? If everyone expects prices to go up and invests accordingly.
It pushes prices up. Yeah, classic market dynamics.
Were all institutions equally bullish?
Not quite. The survey found hedge funds and family offices were even more aggressive. A full quarter of them plan a significant increase in crypto holdings.
25%. Compared to what, the average?
The average across all types was 12%. So double the average.
Okay, so the players with maybe a higher risk tolerance or more flexibility are seeing the biggest opportunity. That tracks.
And it's not just Bitcoin and Ethereum anymore. 73% of these institutions are holding altcoins too.
Diversifying within crypto, that's another sign of maturity, isn't it? They're getting comfortable looking beyond the big 2, exploring different technologies and use cases.
The report also laid out 4 main reasons institutions are feeling positive now. 1, they see the market as more mature, more resilient.
Okay, it's weathered some storms.
2, more people can get involved now, thanks to things like exchange-traded products, ETPs for various cryptos.
Accessibility, right. Easier on-ramps for traditional finance.
3, A more positive outlook on regulation, both in the US and EU. 57% saw regulatory clarity as a top catalyst.
Regulation is huge for institutions. Clarity reduces risk.
And 4, just ongoing progress in the underlying blockchain tech itself.
Makes sense. Better tech, more accessibility, clearer rules, and a feeling the market's grown up. That's a pretty solid foundation for institutional confidence.
Definitely paints a comprehensive picture. But okay, this whole price surge, it wasn't good news for everyone, was it?
Yeah.
Especially the short sellers.
Ah, yes. Those betting against the market in the future space. Never fun when a rally goes against you, especially with leverage.
And it really went against them. Sources are saying over $500 million, $500 million in short positions got liquidated in just 24 hours.
Oof. $500 million. That's the biggest wave of short liquidations since October, you said.
Yeah, for anyone listening who might not know, liquidation is basically when the exchange forces your leverage trade shut because prices moved against you so much you don't have enough collateral or margin left.
And it's often automatic. The exchange protects itself. This kind of event can actually pour fuel on the fire of a rally, too.
How so?
Because when shorts get liquidated, they're essentially forced to buy back the asset at the higher market price to close their position. That buying adds more upward pressure. It's called a short squeeze.
Right, right. And the trigger seemed to be Bitcoin's move, breaking up from around $88,000 to over $93,500 early Tuesday.
That sounds like a key catalyst for shaking out those short positions, but it probably wasn't just Bitcoin getting squeezed.
No, definitely not. Ether, Cardano, Dogecoin, they all saw big moves up too, like 14% in some cases. Solana and XRP were up around 7%. It rippled through the majors.
That interconnectedness again. A big move in Bitcoin, especially a sharp one, can cascade through the market and trigger liquidations across different assets.
And some specific altcoins really stood out too. Sui Network, Uniswap Near Protocol, and apparently MOG, that meme coin, which tends to track Ethereum sometimes.
Interesting. Those individual moves often have their own stories, too. Maybe project updates or specific sector interest bubbling up.
Where did most of these liquidations happen? Which exchanges?
The report broke it down.
Yeah, Bybit apparently had the biggest share, $234 million. Then Binance with $100 million, and Gate saw nearly $70 million.
Okay, so the major derivatives exchanges. That's where you'd expect to see the most leveraged action and consequently the most liquidations when the market moves sharply.
And get this, there was one single liquidation order on Binance, an Ethereum futures position, worth over $4.5 million.
Wow. One trade.
Right.
That's got a sting. It really highlights the risks of leverage, doesn't it? Amplify gains, but also amplify losses dramatically.
No kidding.
Yeah.
So, okay, let's try and tie this all together. It really feels like this current rally, this positive momentum, is being fed by these two main streams converging.
Seems like it.
You've got the macro picture looking maybe a bit less tense, thanks to those Trump tariff hints, boosting general confidence.
Right, easing geopolitical fears.
And then you have this significant growing wave of institutional money coming in,
Right.
driven by a belief in higher returns and increasing comfort with the asset class.
Yeah, the institutional validation factor. It's a powerful combination. Less perceived external risk and more internal big money demand. And then the short squeeze just added some extra juice.
Exactly. And when you really drill down into the details we've discussed, the billions added to market cap, those double-digit crypto gains, the sheer scale of planned institutional buys, the $500 million in liquidations, it paints a picture of some really deep, significant market activity.
It does feel more substantial than just a temporary blip. These specific data points suggest, a possible underlying shift in how crypto is viewed and traded by both individuals and institutions. The level of detail points towards conviction.
So as we wrap up this deep dive, it kind of leaves you, the listener, with a big question to chew on, doesn't it?
Always good to end with something to think about.
Right. With these macro factors looking a bit brighter and institutional adoption clearly ramping up, what are the potential bumps in the road we haven't seen yet? Or maybe what other opportunities could pop up in the next few months for crypto?
Yeah, are these trends sustainable? What could derail them or accelerate them even further?
Exactly. It definitely feels like a fascinating point in time for the market, and watching how all these detailed factors, the politics, the big money, the tech, the market mechanics, continue to interact.
Okay.
That's going to be key.